This is an extremely complex and dense area, and your diagrams actually do justice to the complexity and density. But of course, what they can't show is the multiple flows in all directions. I think it was a real tour de force in setting out the issues, setting out where we are in terms of economic governance, and setting out how an alternative regime may work. Let me just start with a question before I hand over to the audience as follows. I recently wrote a book called Gridlock, Why Global Cooperation is Failing When We Need It Most. And the reason I did that is because I looked at a series of international negotiations in different sectors, trade, finance, climate, and so on. And you're just struck by one thing, that where you need leadership, there isn't leadership. And that's for a number of very specific reasons. I'll just highlight two now. One is, throughout the 20th century, by and large, the West could generate the rule structure of the world economy. It wrote the rules. Increasingly today, in Bretton Woods, it took the US plus one or two European powers to set the rules of the world economy. Increasingly today, with the rise of Asia, the basic BRIC countries, however we call them, you have a larger number of countries that need to agree for anything to happen, and that makes agreement very difficult. More voices, more interests on these issues. Secondly, the issues have become much more technically complex, much more complex. So you've got more voices on much more complex issues. In environmental governance, it looks like this. Ozone depletion, you needed 4 or 5 countries to come together around a problem for which there was a technological solution. Climate, you need all voices to come together around an issue which there's not a straightforward technological solution. It's much harder. So too here. So the long-winded statement leads to this question. What coalition of forces could drive this forward? At the moment, Washington is written out of the equation in some respects, because they are part of the very reason why this is not happening. Europe is focused and inward-looking on the future of the euro. China is utterly concerned with its own economic development. So where will you get trans-border leadership to drive this kind of project?
First of all, let's see why, excellent question, thank you very much, why we don't have trans-border leadership, especially in the field of finance. Of course, there is an issue of capture of governments and regulators by the industry, but this is not the main issue. The main problem is that nobody really understands what's going on because it's extremely complex. It took 40 slides just to scratch the surface. So if I can half read and you cannot read at all, I have a 50% advantage over you, and that's the position between governments and the industry when it comes to finance. We are not going to have any kind of trans-border coalition, and it's a shame because the actual loss of sovereignty is not large compared to the risks, and the actual loss of income to the industry is not that much compared to the risk that this unsupervised and regulated system for the time being creates. So my view is that knowledge can create a well-educated body of citizens who have suffered from the financial crisis and the economic crisis that followed it. Look what is happening to Europe these days, and it's going to be civil society that will start pushing for meaningful reforms, and it's always happening in the United States. Look what is going on with Elizabeth Warren. So civil society is waking up to the fact that this can work to the benefit of citizens and countries and economies and households and businesses and corporations, but can also destroy their employment and livelihood.
Just forgive me one more question. I know there are many more, but social movements and NGOs tend to be most effective when they are pushing around an issue that is reform within a system. So let's take gender transformations and feminism over time. The issue is, by and large, equal rights within a structure. The structures transform, but it's a recognizable claim that can be met to some degree by a significant range of political and social shifts. Here, you're asking for something outside the system. You're asking for a change in the organizational principle of the structure, and that, I suggest to you, is obviously much harder. The interests rallying around it are much greater, and the forces of self-destruction, you call them the forces of dark, are much greater too. So, I mean, I think that waiting for NGOs, as it were, is waiting for a powerful voice of protest that finds it hard to convert that into institutional change when the issue is structural transformation.
Educated citizens and civil society are not just NGOs, they're also voters who elect governments. And intentionally, I use the example of Elizabeth Warren, who is, of course, the junior senator for Massachusetts, an ex-academic, as a matter of fact. So we have two issues here. Educated citizens vote, first issue. Second issue, it has happened before, environmental regulation, there was nothing before. The Human Rights Convention, post-World War. Before the use of chemicals in the First World War, if you were talking to anybody about human rights, immediately they would understand civil rights. The right to elect and be elected, and freedom of speech. Look how the landscape of human rights, which is, I think, the best example, has totally been transformed once the convention was put in place. So you look for coalitions in what we have today, but I have to admit that tomorrow is uncertain and could be worse or it could be better. And as a matter of fact, what I'm suggesting is not entirely out of the system. It's building on what is in the system and reordering the system.
Many thanks. So we should go, of course, to others for questions now. There's a mic somewhere and a question here. Perhaps you could briefly, should we take 2 or 3 questions? Perhaps you could just say who you are, and there's 2 questions right at the front.
Hi, my name is Pierre Chamard from the law school in Durham. Emilios, thank you very much. I admire the fact that you take on international financial regulation because it's such a difficult issue, especially if you want to come up with proposals, just because of the whole issue of sovereignty. And obviously, sovereignty will always be a concern if you want to come up with some kind of grand plan to move forward. And so I'm just thinking whether we should not, in fact, resign ourselves to the idea that we will muddle through crisis. And if I look at what's happening now, I think that's pretty much what we are doing. We are just muddling through, trying to get out of a crisis. And I suspect that we will get there. Yeah, it will be painful, but we will eventually get there. So the idea would be maybe not to come up with some kind of grand vision of reform, but only to put in place conditions, so legal conditions or regulatory conditions which allow us to muddle through times of crisis. Now, I have absolutely no idea what that might be, but maybe that's just the way forward.
And behind you, the gentleman behind you.
My name is Zini. I'm from Durham Law School. I'm a PhD student. I just wonder, you argued, the bankers basically, they use other people's money to gamble. So this is an agent problem. I think it's a very complex problem. But I just wonder, in your argument, I think the main point is to try to strengthen the regulation, even in terms of cross-border regulation. But I wonder whether the financial market, there is less competition. That's just, like in British financial market, it's just several big banks in the, especially enterprise lending market. I just wonder, maybe we have too much regulation. Have you considered to concentrate or strengthen some deregulation rather than regulation? We just make the market force to regulate these players rather than let the government or cross-border government or international agencies to regulate this government. So my question is, have you considered some deregulation of financial sectors?
Well, those are two very clear questions. Should we just
Yeah.
take one more? Anyone else got a pressing question? Yes.
Thank you. I'm Robin from the English department. My question also relates to the current existing banking regulation. And you mentioned that JP Morgan was recently fined and a couple of other large institutions. Is it a case that the existing regulation is going down the path of fear-mongering? So if these sort of big banks are being forced to pay fines, whether or not they are in fact guilty of what they're charged of, it's better to settle upfront, not face criminal prosecution, because doing so they might downgrade their credit rating or lose their license. So they're being forced to sort of pay and settle upfront instead of perhaps if there was less regulation, or if the regulation was a bit more less strict, then they might not have to pay, if that makes sense.
3 questions. Should we stop there? I'm just eager for one or two people who are silent who might ask a question in a moment, but let's just leave it there.
Thank you. First, PS question, muddle through. It's obviously the most likely outcome of what's going on these days, but we did not look at the global economy. The global economy has 3 segments: trade, monetary relations, finance. Trade is strictly regulated. We didn't muddle through. Monetary relations became, in the years after the Second World War, strictly regulated, because otherwise we would have never have a post-war economic recovery and reconstruction. So fine, we'll muddle through, but I think soon we'll find ourselves in the same situation, if not much worse. And that's my objection to muddling through, and not the fact that they do not understand that that's the default position. It's the default position, probably the most realistic scenario. Also, I think if the society at large understands how important is the financial system for their daily lives, things could change radically. But of course, that is very hard to happen, because the system is extremely complex, and even the experts do not really know what's going on. Now, deregulation. The problem with what we have today is not a dilemma of less or more regulation in order to enhance competition. As a matter of fact, there are so many externalities, especially when it comes to financial stability and systemic risks, that you cannot do away with banking regulation. That's some libertarian dream that would destroy the societies, and as a matter of fact, is never going to happen. And when it did happen, it created an enormous amount of interconnectedness, because every financial institution in the world was allowed to do the same thing. So instead of diversifying risk, they were all taking the same risk. So they were all building up debt, and then they were all deleveraging. So they were all contributing to the bubbles and all contributing to the crash, which is, of course, crazy. So you cannot entrust the market forces, because the game is very complex for the market forces as well. They don't understand everything. They don't understand everything because of complexity. They don't understand everything because of reflexivity. Even worse, even if they did, there is an issue of free riding. The financial stability is a public good. Why should I overexpend in order to protect the stability of your system? So we always need to have regulation when it comes to banks and the financial system. The next question is, what kind of regulation? Do I think that right now regulation is extremely extensive, very complex, very expensive? Absolutely. Think that just the general principles included in the Dodd-Frank Act are around to 2,000 pages. sorry, to 2,000 articles. So I assume that the implementing regulations will run to hundreds of thousands of rules. Good news for lawyers, bad news for everybody else. But I think you really touched the wrong nerve. How about competition? And the answer is, if you allow big banks to leverage continually and expand their asset book continually because you have no leverage controls, you will never have competition because they will always be cheaper than new entrants in the market. However, if you restrict their ability to pile up short-term debt and leverage, you will open opportunities for new entrants. Implementing a leverage ratio that restricts Barclays or Lloyds Bank to expand forever in order to open up opportunities for smaller guys is a very small regulation. It has nothing to do with risk weights, has nothing to do with complexity. You just say you can only lend 20 times your own funds. That's it. Okay, it's not risk sensitive, it's not sophisticated, but if you can lend more, somebody else will enter into the market. So I think what I would be advocating for is simple, effective, and clever regulation. And I think with that I answered the third question as well, because we talk about bankers' ethics. Listen, I'm a very ethical person, but here I have two dilemmas as a bank manager. The first dilemma is temptation. If I lend more, if I catch my lending target, I'm going to be paid a bonus. And I have a mortgage, I have a family to finance, a mistress, a drug habit, whatever. Am I moral or am I immoral? Or are my shareholders who have built that incentive in my compensation package immoral rather than me because they are forcing me to sin? So that's a major ethical dilemma that I'm not sure that financial regulation can resolve. There is a bigger one. Forget, I'm not a greedy guy. I don't want my bonus. I don't have any bad habits. And you know what? My family will live in dignified poverty, provided that I have an income. But listen, if I don't lend more, and the guy in the neighborhood branch lends more than me, my employer will kick me out and they will hire him. So how far do I go with my ethics? Do I go as far as losing my job and being unable even to sustain my family in dignified poverty? Am I going to become pauper so that your bank and your financial stability never fails? Probably not. So ethics do not work in this context. What works is simple and comprehensive regulation that inserts, that introduces into the system the right incentives for people to behave both rationally and responsibly.
Yeah. Pietro. This is probably the last question, unless anyone has a pressing one after you, Pietro.
Hello, this is Pietro Maffetone from the School of Government here at Durham. Thank you very much for the presentation. Let me ask you something that, it wasn't entirely clear to me what are exactly the benefits of these global mobility of capital. You said, well, interest rate would be a bit higher if we didn't have it. And I say, fair enough. What's so bad about a slightly higher interest rate if we avoid all this mess? And then again, when you mentioned the benefits of finance, you mentioned issues such as poverty and what a financial system would, what an economic system would be without finance. And I'm entirely with you on that. But why do we need, the shadow banking system? These are things that, local banks or even slightly bigger forms of, financial institutions can do. But I had no single moment in which I thought, the shadow banking system is of any use whatsoever to us in any possible shape or form.
Great question. Let's hold it there. I want to pick up in case that they say there's one more question that I haven't seen. Yeah? Over there? Yeah, please. Sorry to have missed you.
I'm a PhD student in macroeconomics, and my question is, the focus of your presentation has been, what to do to the banks to behave well. But then it leaves out the other part, the people whom the bank lends to, the firms that the bank lends to, the nature of their production function. For instance, in research and development, which involves great uncertainty and which we know is the driver of growth. What can the banks do? How can we get a system that can enable these, firms to be able to do this research which drives growth and at the same time control, the financial system? Thank you.
Thank you. Anyone else? Yes. One more here. Can you hold those questions? Try. Keep going.
Hi.
I'll summarize them.
My name is Falarin Akimbami, and I'm from the law school here at Durham. You mentioned, Emilios, that, thank you very much, by the way, for a very, very good and very, very interesting lecture. You mentioned Elizabeth Warren earlier when you were talking, and it's a really, really good thing that people like her are getting elected into office. My question is, to what extent do you see reform of the political process, the political system, playing a part in reforming finance and making finance better? I'm looking at it from the idea of, in the US, for example, the political system is captured by finance and people who donate to politicians' campaigns, etc. To what extent do you see reforms of the political system, the political process, playing a role and feeding into the reforms of global finance?
Three great questions. I think that's it. I have just one final reflection, and then so you have to carry 4 points. And this comes from a wonderful lecture at the LSE some years ago by Hernando de Soto, who talked about the way in which the complexity of social finance undermines memory, the functions and capacities of memory. What he meant by that was that in earlier forms of banking and early forms of industrial exchange, it was possible to track transactions, by and large, because who the transactions were between and what they were about was relatively clear. But as this system has mushroomed, there can be no memory because the memory capacity isn't great enough to hold that. So what would constitute, a global systemic supervisor and a catalogue of transactions becomes almost inconceivable when so much of that you can't see, and when so much of it is so complex, as you've said, actually very, very few people understand it. And if you look at how long it's taking to unwind Lehman Brothers, it's an obvious case in point. So that's just a final reflection. Has it become so complex that actually it's escaped, in a sense, human cognition, and therefore our capacities to cope? So 4 points.
Thank you.
Go for it. You've got 4 minutes.
For 4 great questions. Obviously, this should have been many lectures rather than one. Benefits, gains. David Held mentioned Lehman Brothers. If you had that, you wouldn't have Lehman Brothers because you would have a dedicated regulator looking at Lehman Brothers and a dedicated resolution authority resolving Lehman Brothers orderly. And obviously, for this to work, there would have been a binding burden-sharing arrangement. So Lehman Brothers would have never been a mess. What you would have is an orderly resolution, a shock in the system, but no catastrophe. When, as I explained in the beginning, the different components, the different parts of the financial system are very vulnerable. When a part fails, when a player goes down, there's going to be a shock. There's no need to be a catastrophe. Now, benefits. You have planned for failure, so you're not going to have a Lehman Brothers any longer. And you have a normative direction. What I mean by normative direction, David Held spoke about lack of transparency in the system, which means that there is no trust. Well, if you have a global macroprudential regulator with a global register of claims, this functionary at least knows what's going on and what can be trusted and what cannot be trusted. So some of the problems of opacity in the system, some of the shadows have gone away, and some trust has been restored. Shadow banking, I do not advocate the abolition of shadow banking, but I understand why you think it does nothing that is useful. Let's take a look at it again and see what it could be useful. It's very liquid. If I am General Motors and I want to borrow 10 billion euros tomorrow, the only way for Deutsche Bank or a syndicate put together by Deutsche Bank to give me that money, otherwise I will default in another loan. So it's a matter of, hypothetical example, it's a matter of life and death for a big American car maker, which is solvent, to borrow tomorrow 10 billion euros from a syndicate of European banks. The only way for those banks to lend the money to General Motors tomorrow is to securitize the loan so that some of the risk is transferred to capital market investors, and also hedge their exchange risk, because don't forget the revenue of General Motors is in US dollars, and they just borrowed in euros. So I have lent money in euros to somebody whose main revenue lines are in US dollars. I carry a major foreign exchange risk in that loan. Interest rate differential, and so on. The only way for me to diversify risk from that loan and hedge the risk is to go to the shadow banking markets and distribute the risk all around the system. The risk will not disappear. It's still in the global financial system. We have not packaged it and sent it to a different planet. And what's left, if we want the liquidity of those markets, is to manage those markets properly. And that's the gist of my proposal.
It just remains for me to say two things, really. I mean, what always distinguishes Emilios' lectures are that he can produce a tour de force with great passion. And whoever leaves this lecture tonight will have not just a sense of the bundle of ideas you presented, but of how you present them. And it gives us all a great deal to engage with. So many, many thanks indeed. I'm glad that this lecture will be watched, and it has been watched not just by this audience, but will in the future by many others. And so just many thanks. There's the book, Governance of Global Financial Markets, 2012. I know at least one journal that's waiting for essay based on this presentation tonight. And thank you, and thank you all for coming. And the next set of lectures in the series are all on our website and available on various lists throughout the university. We have fantastic people coming next term. Richard Sennett, Saskia Sassen, the former Archbishop, Noam Chomsky, just to name some. So I hope you'll come. Many thanks.